Good evening and welcome to Stock Watch this week. I'm your host, Zinati Guma, and joining me for some stock-related analysis is Chantal Marx from FNB Wealth and Investments. Thank you so much for your time, Chantal. It is the beginning of a new month after, I don't know exactly what to call October, because for the longest time we were calling it a good month until it wasn't. So, what are you thinking of sentiment and how you're positioning yourself going into November?
So I think that there's a lot of uncertainty surrounding the US election, not only the outcome, but also what the impact of any one of those outcomes are going to be on financial markets, in the South African context, on emerging markets as well, because there's a dollar impact possibly, there are possible trade implications there also. So all of this has the market quite spooked. And I think when we are now looking at November going forward, we're going to have at least that volatility sustaining into the election, and then possibly for a week or two after the election as well. So my positioning at the moment would be very close to benchmark, and then perhaps having some powder dry to deploy if opportunities pop up. So if something goes down too much, taking that opportunity to buy.
Yeah. Well, I mean, I actually have to ask about this, because talking about things that have gone down too much is Sasol. And yesterday it went down to 98 Rand. And even me, I think I was tempted at some point to kind of go into the stock. And then as I check the markets today, I see that it's up 6% at 104 Rand. I'm just trying to think, I mean, just with Sasol, you talk about, I mean, if, stocks have gone down too much, then maybe that's an opportunity. But would you be looking at Sasol like this, or just in a completely different light?
So with Sasol, I'm a little bit nervous because momentum is still firmly to the downside. I think there are opportunities. I think if you're a long-term investor, perhaps that opportunity is there right now, but you could still take some pain. There are some serious operational issues that the company is facing at the moment, balance sheet pressure as well. So there's a lot to consider when thinking about Sasol. It's not as easy as just saying, listen, this is a cash flush company in a growing industry, and it just got sold down too much on one set of bad results. The results have been bad consistently for a very long time, and we now have to wait for that operational stability to return. And you have to kind of get a sense of what pricing is going to be for some of those major products. So the oil price is an impact. That hasn't really shot the lights out. Chemical prices are still under pressure. So all of these things are things to consider when investing in Sasol. But yeah, you said even me. Even me. Just
I'm
human.
Finished, yeah. All right, Chantal, let's go into some of the questions that have come through. I would appreciate your view on PSG. Results were not too bad. However, the share price is continually being punished. Is this warranted, or does Supergroup face more structural headwinds? I actually even took a look today, Chantal, and the share's up over 3%. What's going on there?
So Supergroup plays in a space that is exposed to economic cycles. So because they are mostly focused on logistics and moving stuff around, when economies are under pressure, less stuff gets moved around. And I think that they've been mainly impacted by that. In the event of a resumption in economic growth, the company should benefit from those tailwinds. So I think it's fundamentally a very good company, just cyclically in a pretty bad spot. Some of their European operations are particularly exposed to the automotive industry, and we know that the downturn there has been particularly pronounced. So yeah, the stock is super cheap. It's very well managed, and it's definitely one that I have at the back of my mind at the moment. Well, probably at front of mind at the moment.
All right. Well, talking about European operations, we do know that FirstRand has a exposure to the UK, and there's actually a question that has come through. FirstRand took a nosedive this week, lowest point in 3 months. Is it the legal matter? There was a ruling that was made on its car finance unit in the UK. Of course, they've said that they're going to appeal, but just this pressure that we're continuing to see in FirstRand lately, do you think that it's pegged to that?
So I think to a certain extent, it's also a function of volatility and weakness in the broader banking space. But first round, I think that UK ruling really did have a negative impact. So basically, they have this business called Motor Novo, and prior to them acquiring it, Motor Novo was engaging in a similar activity that's engaging in now, which is motor vehicle finance. But the rules at that point in time were different in the UK. So the dispute is around commission arrangements and the disclosure of those commissions to clients by motor dealers. And the court actually had a very strange interpretation of that specific set of regulations,
Yeah.
and also the duties of motor dealers to clients. And they are going to challenge it going forward. I do think that it will have wide-reaching implications if the UK Supreme Court also finds against them. And I think that that is probably what the weakness in the share price was all about. It isn't the biggest part of their business. They have made a big provision already relating to a separate investigation by the financial authorities in the UK surrounding these commission arrangements. But yeah, it's still an unknown. But I won't say that it should impact the overarching investment case for First Rand, which is still solid.
All right. I hear you on that. Well, let's get on to Boxer. It's quite interesting because viewers keep on messaging and asking if Pick and Pay shareholders are going to get Boxer shares, and they are going to get them. And I'm wondering, what's the confusion on?
No, so Pick and Pay shareholders will retain exposure to Boxer through Pick and Pay.
Okay,
Boxer
through Pick and Pay. Okay.
Yes, Boxer is not being unbundled from Pick and Pay. So there's still going to be Pick and Pay is still going to hold a majority stake in Boxer, but Boxer is going to be separately listed, and there's going to be a separate offer to new shareholders in Boxer.
Okay.
Yes. So Pick and Pay shareholders won't be receiving Boxer. They'll have to apply to receive them in the initial public offering, or they will have to buy them in the market. But they will have that look-through exposure because Pick and Pay will still own the majority of Boxer.
Yeah, this has really been a confusing point because this whole time I'm thinking that they will be getting, but okay, so they will be getting exposure through Pick and Pay. But yeah, so now actually, it's quite interesting because since you're then going to be getting exposure through Pick and Pay, if you actually want, more, more of a contribution in terms of the capital that you get, should you then not just directly go to Boxer instead of Pick and Pay, which still has challenges?
So if you don't buy the turnaround story in Pick and Pay, and you only actually want exposure to Boxer, then you should be investing directly into Boxer. So you should either try and participate in the IPO if your broker is participating, or you should buy it in the market. But I would caution that everything has a price. We don't know what the offer price for Boxer is yet. We don't know how that stock is going to trade once it lists. And you could be getting into something very expensive if the offer price is too high, or if it's potentially oversubscribed and a lot of investors enter the market on those first few trading days. I'm scared it's going to be like Dis-Chem, because we had a similar hype around Dis-Chem when it listed, and that stock has kind of moved sideways since listing. We've recently seen a bit of a tick up, but it hasn't delivered nearly what investors were thinking it was going to deliver because the offer price was high, and the stock shot up after that initial public offering.
All right. Well, thank you so much for clearing that up for us, Chantal. Let's go into multi-choice. There's actually, because I know that you have liked multi-choice in the past, and the viewer is asking if the share price is basically being held by the Canal deal.
So at the moment, I think it's definitely providing an underpin to the Canal deal. I still don't think the stock looks expensive. I still don't think the offer price is attractive enough for multi-choice. What I do like is the possibility that they could adjust that offer to give you shares in the combined entity as opposed to 125 Rand in cash. And the reason I'm saying that is multi-choice is currently at it's just embarked on, or it's still in the midst of a very deep investment cycles. They've spent a lot of money on Showmax and their platforms, and they're yet to generate the returns from that investment. So Canal Plus was opportunistic in the approach in the first place, and I would like to have the option to have shares in the combined entity so that I can benefit from the synergy gains and I can benefit from that upswing in multi-choice that is expected after the next financial year.
All right. Chantal, let's go into the pharmaceuticals. Novo Nordisk. Could you give your thoughts on Novo Nordisk, the share, and whether it is a share to invest in for the future, and why the share price has dropped over the last few months? I think I remember, was it this week where they came out with numbers and there was a disappointment on, I think, one of their weight loss drugs. Quite interesting considering, obviously, the hype that we've had on Novo Nordisk and Eli Lilly. Was it Eli Lilly actually that came out with results? Yeah.
Yes, it was Eli Lilly that came out with results. But one of the big reasons why they're disappointed on numbers was that they actually aren't able to manufacture enough to keep up with demand.
Okay, so demand is
they're
there.
busy. The demand is there. They're busy expanding their manufacturing capability. Obviously, there's also some supply chain pressures there, because what has happened is because suppliers are struggling to get hold of product, they are actually over ordering, and then at some point they have too much orders, so they don't make new orders. But the demand is there. It's just these bottlenecks that need to be sorted out. Novo Nordisk, I really like as well. I think it's an exceptionally well-run company, obviously benefiting from this weight loss kind of boom that we're seeing, very similar to the AI boom in timing and in importance. And yeah, I see the stock price has come down quite substantially. The first trigger for the drop in share prices for Novo and Eli Lilly was actually Roche coming out and saying that they're planning to develop a weight loss pill, very similar kind of a chemical compound, but in a pill form instead of an injectable. I don't necessarily think that is going to derail the momentum that these guys have at the moment. And as I said, I think it's supply chain issues more than demand issues that were flagged in Eli Lilly's results. So I like Novo Nordisk. I think if there's a proper pullback, it's probably one for the long term.
All right. There's a very interesting one here. What do you think of Collins Property Group in light of their Club Med deal? Funny enough, I knew that Collins Property Group is the developer for the Club Med resort that is being built in KZN, but I actually didn't know that it was listed on the JSE. Is this one that's on your radar at all?
It hasn't been on my radar for a really long time. It used to be called Trade Hold. It was kind of a sister company for Brait, and also under that Dr. Christie Visa umbrella of companies. They changed their name to Collins Property, and I really haven't looked closely at the stock ever since. It was actually a surprise to me when you mentioned earlier to me that they're developing the Club Med. But yeah, I mean, a pretty interesting company, definitely one that I'll read up on a little bit more. But yeah, I mean, I was just looking at the share price performance, has performed very much in line with the rest of the South African REIT space over the last few years, trading at a 32% discount to net asset value, dividend yield of 8.7%. So very similar to the other property companies that are listed on the JSE.
All right. Well, let's get into the commodity space. Sibanye, there's a question here on Sibanye. What is your view on that? Yeah, what can you say about Sibanye right now, Chantal? I mean, if I look at the rallies that we have been seeing from the PGM sector, as much as it does participate sometimes, it seems to basically carry the least buying there. What do you make of Sibanye right now?
Yeah, and technically Sibanye should appreciate more than the other guys when the platinum or palladium prices are going up, because they are very highly geared. So they have a lot of debt on their balance sheets. I think that's probably what the market is concerned about at the moment, because on the one end, it's really great to have leverage when things are going your way, but on the other end, it does put you at risk. So perhaps the more tepid reaction towards Sibanye has been as a result of that. Yeah, they need PGM prices to really pump. They need some of the operational issues that they are facing to get sorted out, particularly in the US. And yeah, I mean, they need to de-gear that balance sheet a little bit to reduce risk.
What about ArcelorMittal? Because this is one that has, of course, seen quite a knock from investors. We even saw some of the challenges affecting Afrimat's results as well. Yeah, ArcelorMittal, I mean, what are the chances of it surviving in this kind of environment?
So I think there's a commitment, especially from authorities, to have ArcelorMittal survive, right? You do want primary steel producers in your country. The problem is just that they're not that competitive in the international context. So they get displaced by cheaper imports. And then they do have an issue with local demand, particularly for their long steels business. And it's been promised several times by government that that demand is going to come, the infrastructure boom is going to come, and it's just taking so long that ArcelorMittal is now running a deeply loss-making business over there in Newcastle, and they need those orders to start coming through. I think that the company is very financially constrained. And because you have all these question marks around them, I don't view them as investable currently. But certainly if things start moving in the right direction from an infrastructure investing perspective, particularly if there are prescriptions around local component usage, then ArcelorMittal could be a beneficiary of that. I just don't like taking that kind of risk.
Yeah, all right. Well, a company that you are willing to bet on, that you don't have question marks on, your stock pick for today, Chantal?
Yes, so I was thinking about particularly all the volatility and uncertainty around the US election. And then I was thinking about things that I'm not uncertain about. And things I'm not uncertain about is South Africans like to shop. They really like to shop, especially when they feel better. They like to buy bigger items. I don't think our consumer is in the space to start buying motor vehicles yet, but they certainly are going to be able to buy some furniture for their homes. And Lewis is just such a well-run company. Cash flush, they've been improving operationally. Their store footprint is properly rationalized now. They've worked on their collections as well, and that book continues to improve. The stock is still trading on a 6.5 times PE, despite a nice pop in the share price after they released a very strong trading statement. And it offers you an 8.5% forward dividend yield. So a really nice company to look for shelter when things are quite uncertain, and especially now that we have some macro tailwinds supporting the consumer even further.
Yeah, you're talking about me there, Chantal, because I feel better about the economy right now. And so this month, I'm definitely buying furniture. Thank you so much for your time and for your analysis today. That was Chantal Marx from FNB Wealth and Investments. And that's all we have time for this evening. We'll be back next week at 6:30. So be sure to send through your questions on email at stockwatch@bdtv.co.za or via SMS on 41392. Back to tonight, though, we bring you more business analysis right after the break. So stay watching.